The role of foreign direct investments in the development of Nigerian economy cannot be overemphasized, as it provides needed capital for investments, create jobs, and of course spur local trade volume. Now, over the last 3 decades, Nigeria's economy has shifted from being a predominantly industry-driven economy to one dominated by services. However, Nigeria's tax and investment incentives by government to cushion the impact of COVID-19 on businesses, coupled with infrastructure investments, are starting to connect the puzzle pieces to build a business environment that will help unlock the country's large economic potential. To increase and sustain investment portfolios into the country that will spur local trade volume, experts say it is expedient for government to intervene in key sectors of the economy through incentives and policies such as market-reflective exchange rates, sustainable fiscal balances, diversified fiscal revenue base through improved tax and customs administration, tackling insecurity, providing friendly business environment, and subnational fiscal coordination, among others. Well, joining me live to give more insight into our second topic today, well, he is a communications and commercial specialist. He's been all around fields, but he's here. Let me just limit it to that for today. Mr. Hameed Abubakar, thank you very much for your time, Mr. Abubakar. It's great to have you in the studio.
It's great to be here with you, Tony.
Great. First, I'm going to start with my intro, looking at what it means for government to transport investments. With all the challenges we face with COVID, how well would you say government has tried to attract more investment into the country?
I think that the challenges cannot be overstated, quite frankly. And it's also important to bear in mind that we do exist in a competitive context. So whatever we're trying to do just to approach recovery, we also need to think about other competing markets that are also putting in place incentives to recover, but then also to catapult beyond recovery and into real growth, which is where the Nigerian challenge currently resides. In terms of the economic management of the country, I can't say that I envy any of our managers in government, not at all.
At the moment.
But we're back out of recession, but now we're not growing as fast as our population, and this is particularly worrying. So I'd say that in terms of at least signaling that the federal government and some state governments were willing to intervene and protect some key sectors during the lockdowns that were very, very painful on the economy. I think it's pretty clear, the signaling was very strong. It was very clear. A lot of the initiatives or the incentives, and I'd like to just take a step back and say that for investment promotion or incentives to promote investments into a country or subnational, you're looking at 3 broad buckets. You're looking at financial incentives, which we saw, a mix of that with fiscal incentives, tax breaks, essentially. We saw those 2 intermingle around our recovery from COVID-19 post-lockdowns. But one of the areas where we have seen Nigeria generally struggle is in the 3rd bucket, the other bucket, which is where potentially you see a lot of interesting competitive responses from other markets, which certain high-value sectors are particularly interested in, because this is Nigeria. We've had 40 plus years of, fiscal incentives around tax breaks, pioneer status. It was taken offline for a couple of years. It came back again, quite strong. The NIPC, run by a very tremendous lady, Yewande Sadiku, does a fantastic job in promoting the country in that regard and making pioneer status and the bouquet of fiscal incentives we have clearly available to potential investors. But on the other side, things aren't as clear, I would say. So there are a myriad of financial incentives potentially, mostly targeted at I'd say MSMEs. So the previous segment you talked about agriculture and whatnot, and there was a particular statement I liked, credited to His Excellency the Vice President, Osinbajo, around Nigeria's advantage centering around the innovation and entrepreneurship of our young people. Now, domestic investment is perhaps more important than international investment, because international investors look for co-investment opportunities. It's a way of managing their own risk. So what are the bouquets of incentives that cut across the 3 buckets: financial, fiscal and other things like shared infrastructure, access to talent. What are the bouquets that are being made available to those new high-value, high-growth sectors? How are we supporting the creation of more Flutterwaves, for instance? And how are we encouraging Flutterwave, the technology company, to embark on further investments that drive things like employment upwards? And education, high-quality education. Because it is no longer enough to offer the 10%, the 3-year tax break or holiday. Everyone else is offering similar bouquets. So what are we doing from the other perspective, basically, especially around things like talent, shared infrastructure for those high-value investment opportunities? And I think that's where Nigeria has not really offered a clear path forward. And we place a lot of emphasis on the center, the federal government. We cannot underestimate the role that subnationals play.
True.
And it's very hard to go and find one source of information where you can see the scope of incentives being offered across all sectors at subnational level. That information is almost proprietary and very hard to access at the moment.
I look at the ease of doing business index, but before then, I still have Mr. Hameed Abubakar in the studio, and we're talking more about investment, of course, and what it means for Africa's most populous nation. Now, before, I want to talk about the ease of doing business initiative of government, which is something I would like you to also comment about, talking about Dr. Jumoke Oduwole and all the work that she has been doing. But I see lately that sometimes we have more of FPIs than even FDIs. Foreign portfolio investors tend to want to come into the country. Why is that always happening? It's a 2-in-1 question, and also your assessment of PEREC.
Okay, so that's a very complex question with like lots of narratives potentially around it. Portfolio investors they're essentially high-value traders, right? So they're looking for trade opportunities. And there was a very promising or very rewarding carry trade that's been happening because of the multiple exchange rates and the various windows that were given to investors, savvy investors at least. So I think you saw a lot of foreign FPIs basically doing what they do best, right? Taking advantage of where is the best place to place their capital, trading, and then trying to exit before the context changes. Foreign direct investment is longer term, some of it, not all of it, and requires a much more rigorous approach to due diligence, understanding the market context at ground level. And there are several ways of coming in and playing in the FDI space. But you're dealing with slower frequency in terms of transaction, a much longer lead time in terms of developing an investment opportunity, finding the right co-investors in many cases to manage your risk or mitigate your risk. And then eventually now trying to deal with one of the hardest, or one of the biggest hurdles with FDI coming into Nigeria, right? Capital importation. And the central bank has really done a tremendous job in trying to clear the way and foster a clearer understanding of what incentives or structures have been put in place for people that have capital, long-term capital especially, to bring into certain sectors. I mean, we don't need to belabor the point. We know what Governor Mefele has done around agriculture. And even supporting investments into the financial services sector.
Creative and all of that.
Yes.
A lot has been done.
So a lot has been done. The FPI, Nigeria's FPI versus FDI thing, well, it shouldn't be a versus thing, right? A lot of that capital is also going into some of these investments, these long-term investments and operators in the country. But I think for our own long-term development challenge, we probably need to look at bouquets of investment, of incentives that drive the FDI component as aggressively as we have seen the market drive, the FPI component of inflows into the country.
I wanted to talk about PEREC. What do you think about PEREC with all of the efforts, all around trying to ease doing business? And we saw the index. I thought there was an effect on the index at a particular time when World Bank released that. So
we moved up. What position are we
I think
now?
about 24 points up. I'm not really sure. The figure 100 and something, but I know. But at least I think we went up about 24 points.
So a country in our situation, in the competitive context that we currently exist in, really needs to be at the top of that
True.
list, quite frankly.
True.
And it will require a lot of concessions, both from government and from the industry, ordinary Nigerians, if we're going to move up that ladder aggressively. But they've done a tremendous job. It's been we've had 2 global crises in the span of this administration.
That's true.
So our economic managers have been fighting fires, and for us to be able to move up that index is quite promising, but it's just not enough at the moment. And it's not just about looking at Nigeria at a macro level or as a sovereign entity on its own. It's also, once again, about subnationals. So you have certain states, like I believe Kaduna State,
Okay.
which has achieved some very interesting rankings and commendation from the international community. I believe at one point in time, I think last year, Nigeria was actually occupying the #1 position in terms of improvements at subnational level globally. Now, what are all the other state governments doing? Because it's one thing for it to be driven at the center, but business operates on the ground in specific locations all over the country. So we can't place the entire onus on the presidency or PEBEC or even the ministers of trade and investment. What are our state governors doing? What are their various commissioners doing? And how are they making that information available to the people that assess, has the country improved or not? But more importantly, are investors feeling the improvement? It's one thing to move up a theoretical ranking, and I do recognize that there's a rigorous methodology in how that's done, but it's another thing to gather anecdotal information from investors, real investors, and ask them, hey, what's it like investing in Nigeria? Those reviews are the reviews that spur further FDI.
Of course.
Yeah.
Following up with that, volume of investment and trade is always affected by news of most times, the valuation of the naira or issues with FX and all of this. So what would you say? What are your thoughts with regards to the state of the naira and how this will affect inflows?
So I think that long-term investors have made their they've created their models and they've already taken decisions about where they're going to be investing.
Exactly.
The issue of Nigeria's FX position is very clear. The message or the signal from the investor community. Maybe not so much in some of the domestic segments, but foreign investors want guarantees that they can bring their capital in and take it out at predictable rates, and that they can manage shareholder expectations, expectations of government and whatnot, through that process. So really, it's not about whether or not the naira is even priced right or appropriately right now. It's about, does the system, do the processes ensure that I know how much I'm bringing my capital in for, and I know how much I can take my capital out for, and I also know how to do it without creating governance issues or completely slowing down my entire investment and operation flow as an investor.
Clearly stated there. Our interest rates. This is something that I like to touch on, and this will, they're not really competitive enough to support all of this. If you look at it, where central banks across the globe are even looking at 0 interest rates. And in Nigeria, we know where we stand. Yes, I'm not saying Nigeria we can't get to that point, but what would you say, what impact will this also have in spurring investments?
So the truth of the matter is that our interest rates are essentially priced according to perceptions of risk based, at least by the biggest lenders, based on decades of operation, decades of actually understanding the market context. And even me personally, right, I've felt particularly bad about how high rates are vis-a-vis other countries in Africa for people that have operations, long-term investments that they're making. But we can't ask commercial entities to completely change their risk assessment frameworks and how they price interest rates. That said, our economic managers, central bank being a particularly important stakeholder in that space, have had this humongous challenge of dealing or taming inflation in Nigeria. And that also has an impact on how low really the central bank can place the rates, and also in terms of its signaling to operators, who then add their premium on top of the actual lending rates to investors and different classes of customers. So we're in this weird situation where I understand the financial services predicament and the bank's predicament in terms of wanting to grow its loan book, but having a fiduciary duty to its investors, which include retail investors like you and I as well. And you're going to go where, like business will flow in the path of least resistance in some sectors in particular. And that's what we've seen. So banks will bank those corporates that they feel are low risk, and maybe they want to borrow in local currency or FX to fund their operations. And they might not look at the rest of the markets where they feel, okay, it's very disaggregated, it's very busy, and the risk potential out there is not fully quantified, but relatively high based on what they know. And so they can't price it any lower than it currently is right now.
And let's wrap up with issues around AFCFTA, which is something that we all talk about now. Now, what volume of trade and investment do you see local investors queuing into as we adopt all of this? It started since January, actually, but a lot of fine-tuning still going on in Nigeria as usual. Considering the fact that we also have other issues like insecurity and all of that, how do you see us tapping into this market?
So, and that is actually, I was hoping you would ask a question in that space, right? In terms of incentives to drive domestic savings and investments, I think that is that should be a focus area when we look at concepts or the treaty, the AFCTA treaty. We don't produce enough locally to be a major contender. We don't have enough of a surplus in terms of production. So how do we play with other countries, say South Africa, where certain sectors of the economy do have surpluses that are going out into the rest of Africa, and they do have expertise and capital to leverage that, plus potentially incentives at their own sovereign level to support that excess production to support regional trade. So the incentives we need to be looking at are for basically production-based incentives for existing operators. Large entities starting with, who can cross that threshold very quickly and become genuine contenders in our region even to start with. And then we need to also be aware that it's a 2021, right? Not everything is going to be manufactured by a Nigerian company in Nigeria and then exported across Africa. We should also be able to support the internationalization of Nigerian entities, so they can also set up operation in other African countries, because it might not make sense for certain products at all to be manufactured here and then transported. Like, it will just not be competitive once it gets to the other markets. So that's what we need to focus our, I would say, incentives on if we are eyeing the AFCTA as a platform to boost economic productivity and our trade balance, basically.
So if you're to drop a word now for economic watchers, policy makers, and all of that with regards to investments at this time, sincerely coupled with second wave of COVID-19, the fears of projections and reprojections, what would you be telling government?
I would say that they've done a tremendous job on traditional sectors, such as agriculture and manufacturing. I would say that there are other high-value, high-growth, high-potential sectors that are easier to internationalize and take advantage of things like AFCTA that have not received sufficient attention. And the perception that those segments have of the role of regulation in Nigeria is negative. And even where that perception is erroneous or not entirely accurate, the communication from the economic managers has not been as forthcoming or as consistent as I personally would like to see it. But it's a country, so we plan in 25, 50-year periods, right? Not in quarters. But I think that there's a lot we should be doing in 2021 to give Nigerian companies a fair chance at really competing at a Pan-African level come 2022 and beyond.
Mr. Hameed Abubakar, first time on the show. We would like to have you again. Thank you very much, Communications Commercial Specialist. Breaking this down, thanks for your expertise and thanks for spending your time out staying with us in Business Nigeria today. We appreciate it.
It was my pleasure. Thank you very much.